Second week of 2023, and it's off to the races for Bitcoin. Bitcoin prices surged to $21,000, breaking through key resistance and setting its sights on even higher levels. The move comes as investors continue to seek out alternative assets in the wake of an unprecedented year of demand destruction and wealth destruction across financial asset classes. Bitcoin was down 75% from its all-time high at one point during the year, but has since recovered much of those losses. However, this is its fourth worst drawdown, and the asset continues to make lower highs each cycle. For many a decade, the 60/40th's portfolio of stocks and bonds protected investors in the worst of times as treasuries were able to hedge against the downside volatility in equities. However, treasuries performed even worse than equities in 2020, a feat that hadn't occurred long before the 60s. In addition, US stocks versus bond returns were as bad as in 1931 and 1969. Subsequently, 2 years after both 1931 and 1969 was Executive Order 6102, the confiscation of gold. This is also where the difficulty adjustment in terms of 2016 blocks came from, and 1971 when the US went off the gold standard. So by that nature, all eyes are on 2024. For more info on this, please see our recent BitTalk episode. Since 1977, the Federal Reserve has operated under a mandate from Congress to promote effectively the goals of maximum employment, stable prices, and moderate long-term interest rates.